Chat, who's tired of winning? Yozol, you tired of winning? We are not tired of winning here on the morning show. Good morning, everybody. Welcome back. Spencer Israel. I'm joined today by Jason Pers, stepping into the guest hosting seat. JC and Steve have gone off to New Orleans, where they will be for the remainder of the week, I think. They're off gallivanting, doing whatever one does in New Orleans. I assume you just eat a lot of seafood, right? And go to a lot of jazz clubs. I mean, I wouldn't know, never been. But I'm here. They're there. I'm here. And the show must go on. So I've got Jason Pers, like I said, in the house. We've got a special guest with us today, SubuTrade. We'll bring him on in a few minutes after Jason and I talk about some headlines. And I don't know how long the show will be today. Maybe it'll be a half hour, maybe 40 minutes. I don't know. We'll play it by ear. Shall we dance, everybody? I say let's dance. Drop me a like. And let's bring on Jason. Here we go. Pers.
Hey, what's up, Spencer? Excited to be here today. On the morning show. Glad everybody's gone. Have fun in New Orleans, guys.
Dude, the kids are in charge. That's kind of how I see it right now.
Yeah.
Or mom and dad are gone.
Maybe the kids are gone. Maybe the kids are gone.
That's definitely the adults are in charge. All right. Let's see. JC is tweeting about coffee, but more importantly, we got a CPI print. 2.6% is what I'm seeing. Is that what I just saw? What is the smallest year-over-year increase in 4 years? Oh, that's interesting. Okay, cool. So CPI month over month coming in up 0.2%, which I guess was a smidge below the 0.3% estimate. Core CPI, same idea. Year over year, core was 2.8%. And actual was 2.3%. Both those numbers were in line, if not a smidge below the estimate. So CPI inflation is light. What does that mean, Jason? I don't even know.
So it just basically means that the market's going to say everything's in line, everything's okay, and we can start moving higher. Basically that's about it. If you really look at the numbers, like once I actually get to dig into the numbers and see like where exactly did it go down, where exactly it went up, then I can kind of get an understanding of it. But at the moment, it's just been like this consistent. The biggest thesis that everybody's has on inflation is kind that understands it. It's kind of the same thing, which is it's sticky. Mm-hmm. It's just not going anywhere, and that's the problem with it. Is like, we can see some decreases here and there, and we see slight increases. But it's just been sticky. It hasn't gone anywhere. It hasn't gone down. They're not to 2% yet. So I just think it's just continue to think inflation will be sticky. Also, it is at a point where the Fed could continue to say we could cut rates, or we can just hold them here. Nothing's putting a gun to their head to make them move one way or the other. So I do think that this is kind of a nothing burger print. But it's really how the Fed reacts to it in July. That's going to be everything for me.
All right, here's some numbers for you. 12.7% decrease in the price of eggs. Hooray! Our national nightmare is over, Jason.
That's all I wanted. If the eggs are down, we're good. Like that's the world is okay. Everybody will be fine.
That's exactly right. Yeah, you don't hear about the price of eggs anymore because they went down. So this is exciting.
It got so crazy a couple years ago, actually, that I ordered food from Kroger. And when they were bringing the food from Kroger, the guy who was shopping was like, "Are you sure you want these eggs?" And I said, yeah, I do. And he's like, "Man, at some point, I'm going to have to sell my girl for these eggs." And I was like, what? Like some random person on Kroger is just having, he had a whole conversation with me about how crazy the egg prices were. And it's like, that's just a random person, it's wild. So I'm glad the egg prices are down. Everything's okay. I hope he didn't have to sell his girlfriend, and everything's just fine.
What else jumps out to me? Food away from home rose 3.9%. What else? I mean, fuel's going down, but we knew that, right, Jason?
Yep.
Follow commodity markets, so not a real surprise there. What else sticks out? There's food, there's energy. Airline fares fell 2.8% after falling 5.3% in March. Nothing else really jumps out to me. Shelter up 4%. I guess that's not a surprise. Yeah. All right. So what's the reaction so far? We are up. I mean, I probably should have led with that. Market reaction is higher, albeit slightly across the board.
Slightly.
Yeah, slightly higher.
But it was lower earlier, so it was down earlier in the morning. So up is good.
Up is definitely good, especially after a day like yesterday, right?
Yeah.
You have a huge gap up higher. You want to see the follow through. So it's early. It's 8:37 in the morning on the East Coast, but so far so good. So
BlackRock will probably be up again, and you'll be happy.
Yes, I like when my stocks go up, and I like and I like that one. So what had happened, see, Jason, was I had sold. To me, BlackRock was like a tactical thing, so I had sold it like a month ago, and I was like, I shouldn't have done that. I shouldn't have done that. So then a couple weeks back, I was like, all right, I'm getting back. I'm getting back in.
Nice.
Yeah, I did that with pretty much most of my single stock positions. I like went flat, and I was like, oh, why'd I do that? So in any case, okay. Before we bring on Subu, Jason, I don't know if there's anything specific on your radar for the morning. I did want to mention a couple headlines. I'm watching. We're all kind of watching UNH today, right? It's down. Is it down 10% still? It might be in the pre-market. Their CEO, down 10%. The CEO stepped down and they suspended their guidance for the year. So this is just continues to be a disaster. One of the big disasters of the year.
So why do you guys in the chat think that he left?
He cited personal reasons. What could that possibly mean? Anyone?
In the chat, you guys should let us know, because that sounds pretty bad. That sounds bad. That doesn't seem like somebody died in his family. It doesn't seem like he's going through a tough period of time. It seems like he's afraid of something. So let us know in the chat.
I also would be afraid.
I would too.
If I was in full defense to him. Okay, so that's down 10. What's up 10% today? Coinbase. Damn, I wish Steve were here. He would be taking a huge victory lap because they're being added to the S&P 500. They're replacing Discover, who is, of course, being acquired by Capital One. So shout out Coinbase, the first crypto company in the S&P 500.
Well deserved. I mean, that's the thing that I want to say. As a person, I've been in crypto for a very long time, and as a person who's used Coinbase for, I think it was I found it in 20, because it was a mess back then. I was part of the Mt. Gox thing. Like all that was an absolute mess at that point. All the exchanges sucked. Coinbase was the first one to do it just the right way. You never had to worry about your money. And then they got FDIC insured. Then they went public. They did everything the right way. So I do think that it's well deserved. I'm glad to see them in the S&P 500. I think it's been a great stock. I hope everybody's making a lot of money who owns it.
Yeah, I can't wait to hear what Steve thinks. I mean, I'm sure Steve is just like, he's been long and strong Coinbase for years. Pretty sure he has it in the IRA. So shout out to Steve.
It's one of the best companies. If you want to buy something good in that space, that is a company that is going to be there in probably 10 years.
That is real. It's real.
That is real. Coinbase.
They have a real business over there.
Yeah, Coinbase is probably it. It is amazing. So no, I love that. Glad to hear that. That's good news.
And they're like as regulated as you can be for a crypto company, right? Because it's publicly traded. There's the SEC, but then they're involved with they want the regulation, right? And so there's pretty sure there's some FINRA regulation that they have. So
yeah,
and you mentioned the insurance, so all good things. All good things for Coinbase. You'll probably never see it at $30 again, like you did a couple years ago. So
yeah.
Okay, a couple other things, and then we'll bring on our guest. I know SoftBank had earnings. I know C Limited had earnings, and C is up a lot. C and JD both reported. They're both up this morning. C is up 11%, JD up 3%. I'm seeing, and that was kind of it in the way of headlines. Jason, do you want to sort of introduce or tease who our guest is today? Because this is your guest.
Yeah. So SubuTrade's a buddy of mine. You know, we talk markets all the time. I always read his stuff. He has a great channel at SubuTrade. So if you just basically go to SUBU Trade on Twitter, you can find all of his stuff. And man, this guy has phenomenal charts, builds them all himself, back tests using code. I mean, a guy after my own heart. I love this guy's work. Great guy. And also very knowledgeable. If you want to talk to him about history, you want to talk to him about anything like outside of markets, man, the guy knows a lot. So excited to have him on here. He hasn't been on just yet. We've been talking to him I've been talking to him a bunch. I know a couple other people have reached out to him here and there, so I'm excited to get him on today. I think it'll be great for all of our audience.
And we were just talking backstage. He was telling me that his parents are traders, like independent. So he grew up like learning how to trade from his parents, like after school. I can't wait to ask him about that. That must have been crazy.
Yeah.
I told him what a privilege that must have been to have parents who are traders, just independent traders who can teach you like what they do, right? Yeah. So.
Well, that's kind of what me and him talked about, because I had a great uncle who traded, and you know, so it's interesting when you learn from them, because you're kind of outside of all the BS that most people have to go through to learn how to trade.
Yeah.
When you first learn how to trade, most people just go to the worst of the worst things, or they're on CNBC every day or Bloomberg. At the very least, they can tell you that's BS. And you're still going to do it. Like, you're still going to do it because you think they're old and they don't know what they're talking about. And then over a couple years, you're like, yeah, you know things. So it'll be interesting to ask him some questions. Feel free to do so, Spencer.
Yeah. Should we bring him out?
Let's bring him on.
All right.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
All right, good morning, guys, and thank you, Jason, for the kind words.
And we got the avatar and everything. Look at that. What's up?
How's it going?
Good to see you, man. So, you know, you always have some great charts and some great back tests that you're always going through to show us on Twitter. So, what are you seeing this recently? You know, I'm sure you brought a bunch of great stuff. He always has great charts. So, do you want to start with your charts, or do you want to start someplace else?
Yeah, let's start with the charts.
Where you tell me where you want to start? I you know, they were in no particular order, so
yeah, so that's great.
Okay.
So basically, yesterday, I mean, we got very close to this, but basically, the NYSE advanced decline line came very, very close to hitting an all-time high, and this is the first time in over 100 days in which we've done that. And as you probably know, breadth tends to lead price, and right now, breadth is leading the market higher. So this came very close to hitting that record high yesterday. But at the end of the day, breadth pulled back a little bit, and you can kind of see that in some of the sectors. For example, in XLF, the finance sector, the market opened at the high and it kind of fell a little bit throughout the day. But today we could very easily hit a new all-time high for the advanced decline line. So breadth, generally speaking, has been quite good for the market. You know, as you guys probably have seen on Twitter or X. Over the past couple of weeks, we've had various breadth thrusts, for example, the Zweig breadth thrust. And all of this just points, generally speaking, to more gains for the stock market over the months and year ahead. So if we could just move on to the next slide. All right. So as you guys also probably know, yesterday, the NASDAQ and the S&P, they both reclaimed their 200-day moving average. And you hear this a lot on X. Basically, a lot of people say, oh, nothing good happens underneath the 200-day moving average. And that's not true, because the market obviously bottoms quite often under the 200-day moving average. So what they tend to mean actually is that under the 200-day, you end up getting a lot more volatility. It doesn't mean that the market can't rally from under there. You just end up with a lot more volatility, right? So for example, you know, in 2008 and 2009, once the market fell through its 200-day, you had a lot of volatility, a lot of big ups and big downs, but of course the bottom was under the 200-day. So in this stat, what you can see is that this is what happens when the NASDAQ 100 closes above its 200-day moving average after more than 35 days. So as is typical, as you would expect with many trend following indicators, the market tends to go up over the next couple of months and over the next year. So next slide.
All right, we're moving here, cooking with gas.
Yeah. So again, so this is a very simple chart. So, and you guys can do this in Excel, in Python, and whatever you want to do it. And it's basically just looking at, you compare the S&P 500, you compare the S&P 500 when it's above its 200-day moving average, and then you compare the S&P 500 when it's below its 200-day moving average. So again, going back to that phrase that you hear a lot, which is nothing good happens under the 200-day. It's not that nothing good happens under it. It just means that most of the gains for the stock market occur when the market is trending higher, as opposed to when the market is, below its 200-day moving average. So this is just a very simple trend following sort of thing. And again, you see this all the time where people say, the market, they act like these moving averages are some magical, mythical thing. So for example, if you test the 200-day and the 199, the 198, the 197, or the 201, 202, 203, 204, you won't find a very big difference, So generally speaking, the point is when the market is trending up, it's generally better to be long. And when the market is not trending up, at least from a trend following and momentum perspective, it's better to, just sit on the sidelines, be in cash or whatnot, and just let the volatility kind of ride itself out. So if we can move on to the next slide. All right, great. So now if we kind of dig down into the various sectors of the stock market, one of the sectors that I've been long, and this is a small position, this will not be a very big position for me, has basically been energy stocks, right? So if you look at the COT report, which is the Commitment of Traders report that's published once every Friday, they break down kind of what are the commitments of various types of traders for various asset classes, for the currencies, for various commodities, for equities, and then within equities, they break it down by sector. So this is the sector for the S&P 500 energy stocks, and just like oil and natural gas itself, those the energy stocks have fallen quite a bit. And what you can see in this chart is this is looking at the dealer net position and the asset manager net position for the S&P 500 energy sector. And basically, the dealers are the most net long since the COVID double bottom, and the asset managers are the most net short, again, since the COVID double bottom. So that suggests that we could possibly get a rally in the energy sector. And one of the really interesting things is actually this. So if you go back to 2020, what you will see is that, stocks bottomed in March, but the energy sector essentially double bottomed. So whereas the entire S&P just rallied up and up and up, the energy sector rallied, it double bottomed, and then it started to really push higher in late 2020 and then throughout 2021. And that is entirely a possibility today, and you kind of see it already, which is that, oil prices double bottomed, right? Whereas the S&P itself has just been going up and up and up. So we could very easily get this kind of scenario happen again. So if you can move.
Well, also oil is coming off of, a brief spell in negative territory, right? So
Exactly.
It was the best performing sector coming off those lows, but really only as a function of the fact that it went to negative 40 or whatever it got to, right? Which,
Right.
we all know it wasn't a real price, right?
But if we're talking about the energy stocks, though, if we're just talking about the energy stocks, those didn't hit negative, and
That's true. Okay.
It was the best performing sector from 2020 to 2024. So there is that aspect of it that you have to take into mind.
Yeah.
And also, I wanted to add for you guys who don't know, there are sector futures. So part of the idea here is that we're pulling the data from sector futures, which you have to still register with the COT reports. So this is great data here. I love this chart. It's just saying a lot, and to me, it's kind of the same thing I'm seeing, which is there's a lot of interest in this sector, just not the momentum you'd like to see behind it to get us interested, at least. So I'd like to see this thing actually start to rip, but I also think this thing is bottomed. So there's two things to talk about. And then also OPEC. And I don't know if you guys have looked into this yet, but they continue to say OPEC is interested in loosening up supply of oil. And that's not true. They're going to come out at some point.
Haven't they been saying that for a while, for years?
They've been saying that they're going to come out and loosen supply for years, but like they ran a huge article the other day, which is the reason they had that big drop in oil the other day. I'd be very surprised if they came out and said anything along those lines in the next 6 months. I'd be very surprised. So I do think that oil's probably going to bounce here. I do think the energy sector could also follow it. And I do think the dealers are seeing that. The dealers are also seeing that. When we like to bet on the side of the smart money, smart monies are the dealers or the commercials, as we call it. So I love this chart. I think there's probably some upside in the energy sector. I'd just like to see a little bit of more momentum out of it first.
Question for both of you: what would be your preferred instrument to play? So Subu says he's long energy. So in what way?
So I would take XLE. So looking at the comments, somebody was asking the question, any good recommendations to express this thesis, USO, Oxy, UNG? The problem with the actual oil and gas ETFs is that it doesn't match very well. It doesn't match basically the underlying very well. So those ETFs are great if you're going to do like a short-term trade, over a day or a couple of days. But anything longer than that, let's say you're trying to take a trade for a month or so, that's not a very good ETF just because the mismatch in the ETF. So XLE is my preferred way of trading this. And of course, you can take the individual stocks, right? For example, like Oxy, Chevron, or Exxon. But if you take a couple of those individual stocks, you basically end up with XLE itself, right? So,
Yeah.
and actually, Jason, so the funny thing is, I'm based in Dubai most of the time. And during COVID, one of the funniest things was because oil prices had fallen that much, and you read stories about like, George Soros's fund or whatever, they're just like, renting oil tankers, and they just, holding the oil in those tankers, right? Kind of until the prices come back up. We would actually see that, so living in Dubai, you'd actually see during COVID just those oil tankers sitting offshore, for a couple of months until the oil prices went back up, and then I guess those tankers went to wherever they needed to go. So yeah, that's a personal story.
That's interesting. Yeah, and I'm the same way. If you're going to try to build a basket of these, like you can, sure. And if you're really good, great, go do that. But for me, it's easier to continue to go, hey, I'm going to go to the ETF. As I see risk on in the sector, I might go to the OIH ETF or the XOP ETF, depending on what I'm looking for. But I still do like the commodities themselves. The reason why the ETFs are kind of rough is because the roll cost. When you start to roll to the next one, starts to cost them money. So basically, most of the time when you roll to the next contract, it's more expensive than the last contract. So as they continue to roll forward, you're losing money as you're holding onto that position, which is why the futures are a very clean way to do it. There's also micro crude oil futures. So for people who go, I can't trade futures, they're too expensive, there's micro contracts in everything nowadays. So feel free to look at those. A lot of money to be made there.
General rule of thumb, right? Equity-based ETFs are "quote unquote" cheaper and have fewer hidden costs than any commodity-based ETFs, right?
Yes,
the commodity-based ETFs are going to be based on futures, and like Jason said, there are roll costs associated with that. If your ETF is based on an equity, like an index or stocks, whatever, it's not going to have that, right? So, in any case, I skipped a slide here because we're talking about oil. So what's the take here?
Yeah, so this is just this is the daily sentiment index, which is a very popular sentiment indicator from trade futures for crude oil. And basically what you can see is that, during the recent decline, sentiment for crude oil had fallen to quite a bit. It was quite pessimistic. And as you would expect, when sentiment starts to get this low, you can pretty much expect a rally in oil along with the energy stocks. So this is just looking at that same sector from the perspective of sentiment. Yeah, so just moving on to the next slide.
Actually, I wanted to go back to this guy.
Okay, great. All right. So yesterday, as you guys probably know, VIX fell below 20. And 20 is I saw a pretty funny tweet on Twitter. It was like the last time VIX was below 20 was the same time that, Leonardo DiCaprio was also dating someone in their 20s or something. But basically, this is what happened.
I don't think that's true, but
or something like that. I mean, it's well known that he has for him, his girlfriends, they have to be 25.
Yes, that is well known. I don't think that VIX was below 20 like a couple years ago. It was last year.
Yeah. I don't know what that guy does, but anyways, this is what the S&P 500 does when VIX cycles from above 45 to 120. And actually, so there's a very interesting cycle that, a good friend of mine called Names had mentioned to me first. It's called the kitchen economic cycle. And it sounds funny, the name, but basically what it's saying is that the market moves in a 40-month cycle. And if you backtest it, it's actually one of the most accurate cycles I've seen. So there are very few backtests where if you look at the past 100 years of data, you would consistently find something that's bearish. So basically it's a 40-month cycle. And then, those 40 months, every 40 months, the next 12 months, you tend to have problems for the stock market. So if you just had used something like that, a very simple cycle kind of indicator like that, at the start of this year, it would have been a good idea to buy VIX calls or at least buy some SPY puts. So of course we had that whole VIX spike, and now that the stock market is rallying, VIX is coming down and is now under 20. And when that happens, of course, it tends to mean that the bottom is in for equities, and the stock market tends to go higher over the next couple of months and over the next year. So that's pretty much the stat. And if we can move on to the next one. All right. So one of the really interesting things, and I think Jason, you've been doing this at the start of this year, which is basically that, going into this year, it was obvious that kind of the whole trade war theme was going to be, a popular thing. And themes and narratives matter a lot, at least in the way I trade, because, trend following works, but the biggest problem, of course, with trend following is that you have a lot of stop losses, right? Like, for example, you get a breakout in one direction, it turns out to be a false breakout, and then it comes back down. And it's the proverbial death by 1,000 cuts, where you're not losing a lot of money on any single trade. But if you have too many stop losses, if you get stopped out too many times, those losses add up, right? So the way you kind of deal with that is you have to ask yourself, okay, so the market is breaking out either up or down. Now, is there an actual theme? Is there an actual story that can drive this market higher? Because if you don't have that theme, if you don't have that narrative, it's more than likely that that breakout is going to be a false breakout, right? So going into this year, the trade war theme was an obvious thing. And of course, one of the main beneficiaries of the trade war would be gold, right? Because you got to imagine, if you're China, okay, and at the time you were holding almost $1 trillion worth of US government bonds, and if you don't know how bad this trade war is going to get, there's a chance that the US government just, says, screw it, we're not paying you back, So, I mean, Russia faced that problem after the war with Ukraine started. So basically, any country that's kind of going through like a geopolitical turmoil with the US, they're going to start to wonder, is it a good idea for me to hold this many US government bonds? Or should I diversify my reserves into something else? For example, gold, right? So you would see a lot of central bank buying over the past couple of years. And one of the other factors that pushed gold higher at the start of the year was a lot of retail buying from Chinese investors, right? Because imagine this, okay? Chinese investors have a lot of cash, right? They have a lot of savings, right? And the real estate market in China is basically, it's finished, right? The past 20, 30 years of real estate growth is basically just finished. So you have all these investors in China who have all this cash, and they're not going to put it into real estate. They're not going to put it into stocks because the Chinese market has done nothing for 20 years, right? Or 10 years. So what are they going to do? They're momentum traders, right? So they take a look, they see what's going up, and that's gold, and they all kind of pile in. So the combination of that retail buying from Asia plus central bank buying from primarily China and a bit from Russia, that pushed gold up. And, as gold went up, of course, its RSI became extremely high, right? And so during the stock market decline last month, when stocks were crashing, gold was also popping higher, right? So these two assets, gold and stocks, had an inverse correlation. And basically now that, stocks are rallying, you would expect gold to, at the very minimum, consolidate sideways, if not fall into correction territory. So this is basically just talking about, our outlook for gold is not very, bullish. We're not very bullish. I mean, it doesn't mean that gold has to crash. It doesn't mean that gold has to fall significantly, but at least the rally is going to consolidate and pause right here. So moving on to the next slide. Right. So during, the whole stock market crash, as a lot of foreign investors, for example, Europeans, they kind of, sold their US assets and rotated back into European assets. What ended up happening is that the US dollar fell, right? So you had stocks falling, you had the dollar falling, and you had US bonds falling at the same time. And what we ended up getting is that, based again on the COT report, you can see that for US dollar futures, asset managers were historically short, right? And if you look at the individual currency pairs, you will see the same thing as well. For example, the US dollar JPY, all those currency pairs, the asset managers are historically short against the dollar. And if you look at a pretty long-term chart, a 20-year chart against this, what you can see is that basically these asset managers, they've never been right? So every single time when they've been this short, it's either been the exact bottom of the US dollar, or it's been pretty close to the bottom of the dollar. So from a risk-reward point, if you're short the dollar at this point, it is not a good idea. And it's better to be long the dollar than short from this point. So just moving on.
That's interesting. I wouldn't have thought that. I think that's the last slide that I have, actually.
All right, great. Yeah. So basically just looking at, commodities, looking at the dollar and looking at equities, there's various opportunities out there. Just from a personal perspective, I think that at this point, from an equities perspective, and from a risk reward perspective, which I think is the most important question, neither bulls nor bears, have an edge here, right? Because I mean, the rallies. I mean, if you look at, for example, the various indices in the sectors, they've retraced like 78.6% of the decline. So basically, they've retraced most of the decline, right? So the past month, you would be calling for a mean reversion rally, and we got that rally. So what happens next is it's hard to say, basically, but there are better opportunities elsewhere. For example, in currencies right now.
I wanted to ask you, since I mentioned at the top that we were talking backstage, you said that your parents are traders. Can you just talk to us about that before we let you run here, and sort of what was that like growing up with parents who are both independent traders working for themselves, and like at what were you like always naturally interested, or was it a function of the fact that they were your parents and they got you interested? Because I feel like I would have rejected my parents trying to get me into anything, right? So like what was that like?
Yeah, so I mean, in my case, I was always interested.
Okay.
But I've always wanted to be an entrepreneur growing up. It kind of runs in my family, and our family we also have a lot of friends who are entrepreneurs as well. So when you grow up in that kind of environment, it kind of gets built into you that this is the thing to do. Like, do not get a job. That's the kind of thought mentality that gets pounded into your head from a very young age, right? So one of the interesting things. So the reason I had a natural inclination towards trading as opposed towards business is that for a lot of businesses, basically you're long only, right? Like you need the economy to grow. You need, you can't get a huge recession or something. So trading is nice in the sense that, you can profit both during good times and hard times, right? You can be both long and short. Whereas business, for example, let's say, you were running some import-export business from, I don't know, China or whatever to the US, and then something like this happens, where you get like tariffs and this and that. What are you going to do, right? The only thing you can do is not, get killed along the way. You can't benefit from the scenario, right?
That's true.
So going back to what happened, which is basically growing up, I was very lucky in the sense that both my parents were independent traders. And so basically after school, every single day, my parents would sit me down for 2 hours and kind of just say like, hey, you look at the market, okay? And then we'll compare our way of looking at it, and we'll like look at your way of looking at it, and we'll do a comparison. And they would basically teach me along those ways. You know what I mean? So for example, they would take out, let's say, a chart of silver or a chart of gold, right? And then they would say, okay, so what's your analysis? Take half an hour, write down your analysis, and then we'll compare notes, yours versus ours, what you can improve, different thought processes and stuff like that. And there's a really good question actually looking at the chat. So this one guy called Trading, basically, he's asking, what's the most impactful trading lesson you learned from your parents? And I would say it's this, and I think a lot of beginner traders will benefit from this, which is that you need to know why it is that you're making money, right? So you see guys, who've been trading for a year or two, and they're making money, and they're saying, what I'm doing, it's working, right? But it's going back to that phrase from Warren Buffett, which is that only when the tide goes out do you see who's swimming naked. Which is to say, in a bull market, okay, you could be doing anything, right? You can be like doing some voodoo dance, you can be flipping a coin, you can be throwing darts at a chart, you can be doing anything, and you'll be making money. But just because you're making money, it doesn't mean that that's the right thing to do, right? So I'm not sure if you guys read the book Liar's Poker. I mean, it's a hilarious book, but there's a very good line from it, where he's saying, so it's an analogy where he's saying, so basically there's a guy, he's walking through a minefield, with a blindfold on, and he actually makes it out to the other side, and he goes, shit, this is the way to do it. so, oh, great. Exactly. That's a fantastic book,
Yes, it's great.
So basically the point is you need to know why you're doing what you're doing, and if the reason you're making money is actually for that reason, or if it's because just, let's say, random luck, right? So I know Jason, for example, is very big on backtesting, and backtesting definitely helps in that sense, because you need to know, is this actually going to work in all market environments, or is it that just so happens that the market environment today fits this thing that I'm doing, right? Because market environments change. I mean, the past 2 years, from 2023 to 2024, it was a pretty big bull market, right? And you see guys doing all sorts of weird things, and they're making money, and and they're pounding their chest on X or Twitter, and they think they're a genius, right? And then these are the same guys that disappear basically, right, over the past 2 months when markets go down, right? And now that markets are up again, they magically reappeared. So you need to know why it is you're making money, and if that strategy works in all market environments, up, down, and choppy environments.
That's great. I couldn't have said it better myself, honestly.
Yep. Perfect.
Yeah. Subu, this has been great, man. We would love to have you back on again soon. I think we have a lot more to talk about. So thanks for coming on. Thanks, Jason. Thanks for setting this up, man. But Jason, do you have any final questions or any thoughts?
Oh no, I love that. Talking about cycles, we think of markets in a very similar way, which is like we're trend guys, but we're also like I look at regime models. He looks at narrative. Like we kind of look at markets in a very similar way. So I was always very excited to get him on here and just kind of go through this because it's like, man, there's so much good information here. So excited to see you back on at some point, and we'll see you soon, man.
All right, thanks for having me on, guys.
Yep,
thanks
for coming.
All right, I'm quite sure that Kenny Glick would agree with the comment about making sure your strategy works in all environments and following people who are not just there for the bull market. Kenny's here right now. His strategy works in bull markets, bear markets, sideways markets. We talk to him every day. Let's find out what he's trading, and then we'll hop out of here. How about that?
All right, sounds good.
That's not the Kenny bumper. Where's the Kenny bumper?
It's been a long time coming. They ain't come from my club, they tug it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Mr. Glick.
Top of the morning. Hey, what's up, Jay?
Hey, what's up, Kenny? Good to see you, man.
You too. What's shaking, boys?
I don't know what's shaking for you here this morning. You buying the dip in United Healthcare? You fading C Limited? What are you fading some China?
Yeah, I'm looking at SC, but we're still going over the UVXY trade and how I was able to isolate this rally starting on April 9th, and I'm trying to make sure people don't think I'm doing this tongue in cheek how the market's not going down anymore. So now I'm trying to explain what this power gap is.
Yeah,
we haven't seen a power gap in the market in a while. So, the consolidation, people are waiting for consolidations to break out, but sometimes it just consolidates and then it gaps above all types of resistance. It's going to make it a lot harder now for the market to even pull back and break down now because you've got the power gap. So the shorts who were still debating whether or not to cover, they're trapped even more so now. The longs that were still debating whether or not to get in the fear of missing out, they've missed out now, so they want in. So now you're going to have this moment where you think the market should pull back, but it literally can't pull back because you got people that are just dying to cover their shorts and want to get back into this market. And now we're even higher. So we're just going to consolidate and keep going higher. And like I said, I'm a bear trapped in a perpetual bull market. And this is why that's why I'm so hip to this move. Years ago, I'd be getting hammered in this market in the last couple of weeks. Oh, this is bullshit. Oh, there's another leg to drop. Oh, another shoe to drop. Oh, wait, you'll see. You're going to get your comeuppance. No, that doesn't exist anymore. The market crashes now, and the speed of the recovery is becoming less and less. What took 3 years now took a year, which took 8 months. What was COVID? 2 weeks until we started rallying.
Markets move faster. This is definitely the way. That's just the way it is, right?
Yeah,
that's
right.
Even without like Federal Reserve intervention, right, which we got during COVID, right? Markets just move faster,
right? And then you got these sectors that just like you guys have been talking about solar. Hell yeah, solar. I mean, when these stocks come back. You got ENPH, obviously SEDG, and the monster for solar. You just go where the money's going, and it just these explosions to the upside are just awesome. I mean, stocks like Lunar. Well, Lunar doesn't do anything.
I think Lunar had a headline today. Why else?
They reported earnings.
Oh well, there you go. All right. Why else would it be up 14%?
Right.
Yeah.
But if this was 3 weeks ago, you read that headline, the stock's down 25%. And that's the shift. We've been talking about this since the Tesla earnings. When Tesla reported those earnings and the stock went up, bull market, we're never going down. And here we are. So it's insane. It's insane. But more importantly, going back to yesterday, people are like, all right, we're definitely fading this market. No, we're not. Maybe we'll get a tight little pullback, and then we're just going to go to sleep. But at least there was one trade, SRAG. Hey, I own a stock that actually went up yesterday. So
one of the reasons I love you, Kenny, and there are many, is that you are constantly at war with your own psyche. And that's so relatable because we are all at war with our own psyche, right? There is what you do, and then there is what you want to do. And very often those are two very different things, right? Like you might want to come in short this morning, but you're not going to do it, but you really want to do it, right?
Just show me some show me some VIX movements and some UVXY. I mean, UVXY got hammered for 5 yesterday.
Yeah.
That's telling you nobody wants to short anything, nor should you even entertain the idea. That's how crazy this market is. So when the dynamic shifts again, there'll be a point where everybody's overly elated again. We'll get to that stage where, the complacent bulls, I guess, but that could be at all-time highs at this point. So it's just like, it's hard to fight this market. But, going back to reality, like a stock like SE, this thing was $35 when I was long this thing. People say, oh, you don't want to go near that stock. Here it is at 175. And people are like, yeah, this is the best thing ever. So somewhere in the middle. But again, that's the kind of stock that I'd be looking to play the short on. But more importantly, I'd rather just crush shorts right now, like Hertz. Look at that beautiful Hertz move this morning and the rigatoni, RGTI, little cheap stocks like this where you're risking a couple of pennies to make some money. Rigatoni at $10.20, you get your 30-40 cents out of that stock. Beautiful setup. And Hertz, you already had the 1 minute to the multi-day and then gets rejected. I mean, I don't have my charts up, but again, this is by far the most entertaining market now I've seen in a very, very long time. I mean, it really is. And the folly of it all, to try to make too much sense of it, your head's going to explode, right? And we're at that point, like, who's buying it up here? Who's not buying it up here is the question.
That's the better question. Who's not buying it up here?
Right. It's really just post-traumatic stress from when I used to get my ass kicked in this environment as a shorter, just waiting for that rug pull that never comes. They pulled the rug already. They've tattered it. They've re-sewed it together. It's a brand new rug. Here, go play. So
I think God bless the people. God bless the people that are in cash or, God forbid, short in this market. I mean, good luck to you, right? You might have I'm sure you have your reasons, but
I'm not getting in the way. But
you just don't want to. It's like it's a train coming at you. You got a train coming at you. What do you want to do? Stand in the way of the train? No, you want to ride with the train. So I'll just hop on the train and make some money on this direction at the moment. And when something else changes, it changes. But I also commend you a ton because that's the thing a lot of traders don't do, which is they get wed to a side. And you've always been very good at hey, it's time to go long. Hey, it's time to go short. Hey, this is the trade today. Like that's what it all is. That's all it is. That's a secret.
It is it is for the day also, and especially, and again, that's why when I trade, it's these setups that I do during the day work on every time frame. It's just like we like to be minute to minute. You could do hour to hour to day. It's the same setups.
Yeah.
But again, having an overall market sentiment does help. And right now, I just keep reminding everybody, just crush the shorts. They've overstayed their welcome, and they're very nervous, and they're going to have to cover. So every dip is probably
they've overstayed their welcome, Kenny. It's been like 3 weeks.
Oh, that's what I'm saying.
They've overstayed their welcome. They just got here. They just got here.
They're scrambling right now. And it's like, so I mean, I'm looking at the cues right now where those pivot points might be generational lows. I mean, we might not pull back. Wait till you see what happens after 90 days. Sure, yeah. By 90 days from now, the Qs will be at 600. So it doesn't matter.
It's been a little more. It's been 2 months at this point, but a little more than 3 weeks.
Everybody's talking about the double bottom. It's got to go back. It's got a double bottom. The market doesn't have to do anything you think it's going to do. It does whatever it wants to do, right. And the best we can do is do exactly like you're doing today. Hey, look at this major, like it's a Monday gap. Like a futures gap and a Monday's gap, like that's a big thing. Yeah. So like now we have this huge gap up. We are seeing some follow through. You just don't want to short it. That it's as simple as that. You just don't want to short it.
Right. I think when sentiment changes, and this will be the big moment, just like, again, we go back to that Cooperman who was talking about when earnings reports act positively with negative news. We got it, and obviously it sparked this whole rally after Tesla. The opposite is true now. So when we get a gap that gives it up, closes weak, and stays down, late day selling, I will put my bear hat back on and start crushing. But right now we're in bull mode, and I'm legitimately even nervous playing the fades. So I will, because that's what I do, and the trades still do work out. But be extra cautious on the short side, my friends. Be on the winning side of these trades, because you're going to get steamrolled.
All right, guys, shout out Kenny. He's at hittobid.com. His room is open now. If you want to trade with him, see his screen, get his VWAP indicators. It's all there.
Wait,
Kenny,
one more second. If anybody's out, I'm going to the park tonight. So even if it's raining,
I forgot. It's the Grateful Dead, the cover band.
Dead in the Park. Steve Leisman from CNBC, rocking for 3.5 hours. Central Park near the band shell. If you guys know where it is, it's up near 672nd and West Side. So Steve Leisman's in a band called Stella Blues Band. They blew a 3-hour show. It's, if you love the Grateful Dead and you want to hang out with some like-minded individuals, it's also a fundraiser for Riverkeeper.
Awesome.
And, all right. And
all right. See you, Kenny.
Be good, guys.
Continue, Kenny. Take it easy.
God, I love that guy.
Yeah, he's great.
All right. Yeah, I didn't even realize until he started talking that Solar is having itself a day and a half. The whole group for Solar, Sunrun. Yeah, man.
Well, we had to bring it up on Chart Report yesterday. When we did our live charting yesterday, we had somebody bring up
we did
one of the solar stocks. I can't remember.
It was for Solar, but I didn't realize they're getting more action this morning. Actually, if you look at what's up today, it's all risk on stuff, man. It's crypto. I mean, that's the Coinbase headline for you. And there's some retail, of course, in there, and there's what else do we have?
Oh yeah,
here?
Look at that gap. Yeah, you can bring up the charts. Actually, I still have them up.
Oh, okay. What do you got here
for Solar?
Yeah.
Just looking at First Solar, like we talked about it. Somebody brought it up yesterday, and as we were looking at that on Chart Request Live, we saw that huge gap out of that weekly, and I was like, well, that kind of does look interesting. And now we're getting more follow through today. I mean, this looks like a great setup. So just another shout out to whoever brought this one up. I'm not sure of the name at the moment, but this is a good setup. Why I said I wanted to take a double take at this one is because that double bottom kind of setup, false breakdown type of setup with a huge gap out of kind of an island bottom and that 3-bar pattern. I think that probably is going to go a little bit higher still. I think that's probably going to head towards 200 pretty easily.
All right. And yes, Miss Unique, John Mayer is still with Dead and Company. They're in Vegas. They're not in New York. But anyway, okay. You know what? Let's just do a couple. If anyone has any tickers, drop them in the chat. We'll spend a couple minutes doing some ticker time, and then we'll get out of here before the open.
Yep.
Because we got some things to buy. Apparently, everyone's doing some buying this morning.
Oh, there's always things to buy. Yeah,
there's a ton of things to buy. What are you looking at here, Jason? What are you trying to buy?
I mean, right now I could just go through what we have in the fund at the moment, at least the ones that are US based. So if we're just looking at it, I'm still very I still have all the precious metals on. Precious metals are still on. I know they pulled back a little bit. Long-term trader like me, gold is still good. GDX, GDXJ. I mean, these are up over 40% on the year. It's pretty crazy. Continue to hold those. I do like copper here still. That massive shakeout pattern. So if we go back here, let's look at copper. I don't know what I have marked up on this thing, but we'll see. Okay, so this is on the weekly. Copper basically sold off so hard here. That's such a massive sell-off and happened so quickly, but it was like the market said that was a bad idea. And it sold off and it just bounced right back up, got towards 5 again, and it's been consolidating. I'd like to see this thing break over 5. If this thing can break over 5, I think it's probably going to head a lot higher. If it just kind of consolidates under this zone, I'm not really that interested, but I do think it can break out here. And I'd still I'd still continue to look at the copper miners, take the signals as they come. I don't have a signal today. Like if we look at any of them, they're all going to look basically the same. I'm not even going to bring it up. But Southern Copper is another one a lot of people like in that sector. And we're just kind of seeing these gap outs. We're seeing gap outs over and over again. So, I just continue to watch these sectors that have been beaten up, like solar, like copper miners, see these gap outs and see where they end up in basically a week or two. Let's get over some major levels. For this one, it'd be over 102 would probably be the first significant level, and really over 125, and that's new all-time highs. So, get over 102 first, and then we can go from there. But yeah, I like a lot of the copper miners. I just think it's not quite ready to buy just yet, but continue to keep those on your radar, whether it's solar, just global growth, whatever it is. And right now, emerging markets are outperforming the U.S. In GDP by quite a bit, and that's a good scenario for copper. So I do think that these things are going to move at some point pretty soon. I just got to kind of keep them on the radar at the moment.
All right, let's do a couple tickers in the chat, and then we'll get out of here. Topher asking about Robinhood. Didn't we talk about that on CR?
We did.
Today? Okay, I feel like we did. Yeah. So it might still be marked up from yesterday.
It is. Yep.
Okay, cool. So super convenient. It's already marked up. Look at that. Clean levels right there.
And these were based on the closes. So, yep.
Still clean.
Yep. Cleaner now. But yeah, if based on the closes and what I said yesterday was the same thing, which is you're above 55 here. A lot of people look at 65 and think there's going to be resistance up there. There's no volume up there. That was a spike breakout. When those come out and they go back and then they go up higher, usually it just blasts right past that zone. I think it'll be above 65 pretty soon.
And then let's look at Snowflake. Dr. Cocoa Banana. Love the name, Dr. Cocoa Banana. Snowflake is, like most things, trading higher this morning. I always forget this was a $400 stock in the throes of that post-COVID bubble.
Yep.
Right after it IPO'd, I believe. But anyway, it's 181 right now.
Yeah, Snow. Yeah. I remember this one was so hot when it first came out. Everybody wanted this thing.
Mm-hmm. Yeah.
You could draw something like that. I'm not a big fan of trend lines these days, but you could draw something like that and say, sure, it's breaking out. The safe zone to really, because really it's like on a trend line, you got to think about it as in price memory. Is the price really going to remember, much about a trend line? No. But if we're looking at the market this way and we're going, okay, well, what does it look like sideways? Well, there's a lot of price memory there. So this is the zone where it's going to start to hit resistance, and what's going to be significant if it breaks out. If I can grab this thing. So if it breaks out of this zone, that's when this thing's probably going to start to take off a lot higher. So I'd wait till it gets above 189, 190, and then this thing's probably going to take off and probably not look back.
All right.
If you like it.
Well, software's been hot, right? So
yeah.
This is one of the preeminent software plays. So
it could move. It could move. It looks like a Spencer. Is it a Spencer pick?
No. I mean, it's not like it could be. It's not right now.
It might be. He's getting sold on it. He's selling himself on it right now.
Well, I mean, to me, it's like, you break above that prior high, right? 195, right?
No, I agree.
Gucci, you're Gucci. Okay. Miss Unique asked about a firm like 4 times, so we'll look at that and then we'll get out of here. Still well below those prior cycle highs. 82 was the high there. We're at 54 this morning. Oh man, buy now, pay later. I still don't know. I still don't understand it, but it's a thing. So I don't.
I do think that this is definitely something that could move higher. Sure.
Well, it's growth. It's tech, right? It's high beta financials. So yeah. If we're gonna be in a bull market, what are the odds that this doesn't move? It's gonna probably.
Oh yeah, if we're in a bull market again and everything's clear, this thing's probably gonna take off. But once again, it goes back to what we talked about earlier, which is everything will probably move in a bull market. You want to figure out the ones where you're going to be outperforming, because the whole idea of trading is not to be in line with the S&P 500 and be like, oh yeah, I've traded the same as the S&P 500. It's to outperform the S&P 500. So find the things that are going to outperform. If it's this, great, but don't just think because something's going up is because it means it's the best thing to buy. There's usually things that are outperforming. Those are the areas that you want to buy.
Miss Unique Buffett bought Snowflake. Actually, Berkshire bought Snowflake, and then they sold it like a couple years later. So
Yeah.
that didn't quite work out for them. Proof that following Berkshire Hathaway, following their stock picks is not always the best idea. You can look at Oxy if you want to learn more about that. Okay. Guys, Jason Pers has been our guest host today, and we appreciate that. If you guys actually want Jason's charts, he puts them out every single week as part of All-Star Charts Gold Rush. I'm dropping the link in the chat. Also, QR code on the screen. Jason, what do you put out weekly? There's the COT report that goes out on Fridays that we were talking about earlier. There's the bond report. There's the precious metals report. What am I missing?
Currency report.
The currency report.
I mean, it's pretty. There's a lot of stuff in there. You know, we put out a lot of information, and we're putting out trades on Mondays. Put out trades on Fridays. Updates on the bond market, update on currency market, intermarket analysis, whatever you guys want, we cover it at the Gold Rush. We don't go into technical tech stocks much. We leave that to our guys at All-Star Charts Premium. But basically anything commodities related, whether it's stocks, individual names, and so on, we cover it, as well with the gold miners, which we've been crushing it all year long with that. The whole
Dude, that's been like the trade of the year.
Yeah, trade of the year for sure.
Yeah, and by year I mean like the last 12 months. Like it's been like a calendar year, right?
Yep.
Yeah,
calendar year or this year. You know, either way, the GDXJ is up over 40% just this year. Same with GDX. You know, so
crazy.
Just this year it's been crazy already. Some of our names are up over 100% just this year. So if you guys want to check that out, get our picks, see what we're looking at. And we also have told you guys when we're hitting resistance on gold, when to take profits and so on. So, you know, we don't just tell you what we're picking. We also tell you when to get out. So please join us at Gold Rush. You can see all this stuff there.
Does Gold Rush need a rebrand? Because it started off as just like a, gold and metals, but now it's so much more than that. Like you said, it's currencies, it's fixed income, and maybe we need to rebrand it to something else. It's such a great name.
I think the Gold Rush name is perfect. I think we could move it into just like All-Star Charts Gold Rush and talk more macro with it. Because it's just, it really is kind of very macro. You know, I know so many people, look at that and go, I don't know. But like, no, it really is a macro product at this point with all these different areas. But we do pick individual stocks in there. We basically take the macro and then we bring it down to micro and pick individual stock names from there. So you guys can get all that research at Gold Rush. A beautiful QR code right on the screen.
My main selling point for Gold Rush is if you read it, it'll make you sound smart at parties, right? Because
make you sound very smart.
Because it'll give you something to say about global markets, right? And who doesn't want to sound smart at parties, right? Well, I think we all want. So,
and most importantly, we make money. You know,
and there's the whole money making aspect of it. Yes, I guess that's a cool too. You can make money.
It's all right, but you can sound really cool. You're right.
But you can sound smart. All right. We're about to open over here. It's 9:20. Oh, actually, there's the bell. So look at that. We timed this pretty well. We're not going to be doing a morning show tomorrow or Thursday. I don't know about Friday. What I might do, and I haven't told Kenny this yet, but maybe I'll just simulcast Kenny's room on the channel. I don't know. We'll play it by ear. Regardless, what we do have going on today is I'll be going live with Jeff Mackey at 1 o'clock to talk about the implications from the trade war or lack thereof, I guess, trade peace with China, what that means specifically for retailers. They all kind of blasted off on this news from the weekend, and retail has been in the crosshairs of this whole trade war shenanigan, and they are now breathing a massive sigh of relief. And he'll talk about that really from a fundamental standpoint as far as what this means for their actual business. And then we'll talk about some stocks while we're at it. That'll be at 1 o'clock today. For all you members of Gold Rush, speaking of Gold Rush, Jason's going to put out your video that they get every Monday/Tuesday. That'll be this afternoon, right, Jason?
Yep.
You'll be doing that.
The video will be out this afternoon. The report was out yesterday. And then Thursday at 2:30, I have a live as well. So
that's right.
I will be doing that. Maybe solo. Might be just me. Who knows? We'll see.
All right. Thank you, Jason. Thank you, Kenny. Thank you, Subu. Thank you, chat, as always. If I don't see you for the rest of the week, go make some money. Enjoy the day. I'll see you hopefully at 1 o'clock for my stream with Jeff. And if JC were here, he would say YOLO responsibly. Bye, guys.
Run it. I can't take no